While the other talking point today, of course, is currency and what kind of impact we could have of this meltdown in the Turkish lira, the emerging market currencies, on rupee and other factors. Let's take that story forward. Pankaj and Poonam, they both are standing by. And Pankaj, first it was strength in dollar index, and now that seems to be having a snowball effect on other emerging market currencies.
Absolutely, Nikunj, and you were seeing Turkish lira or Turkey leading the pack as far as this fall in the emerging markets is concerned. So Turkish credit papers have sold off quite the most in 2018. This is the most when you compare it to any other region that you have seen. Turkish bank today morning has raised rate by 300 basis points, and that has led to a little bit of correction as far as Turkish lira is concerned. Turkish lira at the start of the year was 3.78 to a dollar, and now it's 4.93, which is a significant correction when you consider the base. It's more than about 25% on a year-to-date basis. Russell Napier, one of the well-known analysts and strategists, who writes a fortnightly note. In the recent fortnight note, he says, alert investors, attention to slowdown in the world economic supply, world money supply has started. Turkey and growing emerging market credit problem elsewhere could be an issue. Turkey has started to enter in an economic crisis, and bankruptcy of Turkey means that money would raise to dollar would start to strengthening. That's what he has written. And when you just compare, I'm only talking about currency, not about the credit paper. Turkish lira is down about 10.9% on a 1 month basis. Remember, today it's up 4%. That's because of the 300 basis point increase, but otherwise it's down 15% if you adjust for that. Mexican peso, you have Brazilian real, Indian rupee, which is down 3%, Indonesia rupiah, which is down 2% in this time, and probably Turkish lira is leading the way ahead as far as emerging market currencies are concerned. And according to the strategist Russell Napier, this could lead to a slowdown in money because there is a lot of international investors that are invested into credit paper of Turkey, and that will lead to money supply being slightly on the slower side, which some of the markets, emerging markets specifically, can factor in.
Russell is being quite bearish, almost calling out a bankruptcy sort of crisis in Turkey on the back of a strong dollar. Those are some strong statements coming in from Russell Napier. But let's talk about the rupee being at 18-month lows, Poonam. It's still better off than the kind of fall that we just saw across EM currencies. But even so, I think, like I was making the point, it's a glass half full or half empty, whichever way you look at it. Some might be happy with the level of the currency at this point.
Some, yes, but Tanvir, if you just recall, we are far better off than the situation that we had seen sometime in 2013. If you look at the rupee, yes, it is down over 6% on a YTD basis. Of course, it is the worst Asian currency on a YTD basis and even on a 1 month basis. But in fact, it's done far worse than an Indonesian rupiah as well as a South African won. But if you look at the overall macro picture back in 2013, we had a very high fiscal deficit. Current account deficit also was significantly higher, as well as the CPI inflation was around 10 odd %. But today we're seeing the CPI inflation far under control at around 6 odd %. Very recently, we're seeing the fiscal deficit down to nearly 3.5% versus 4.8% back in 2013. We're also seeing that the current account deficit is now 1.9 odd % versus a 3.6% sometime then. So yes, from a relative macro picture, we are far better off. But having said that, of course, the entire rise in terms of the crude oil prices is threatening the overall macro picture on fiscal, CAD, inflation, etc. We're also seeing the relative strength in the US dollar. And of course, FII have been net sellers both in the month of April and May. They've sold close to $5.8 odd billion in debt and equities. And it is also the fact that the Indian carry trade probably is no longer that attractive for them. That's one of the reasons, and besides that, no valuation support as well. We're also seeing that the global monetary policy stabilization is also there. So a lot of factors which are not working in favor of the rupee, but I would say that we are still far better off now with the kind of reserves that we have, although we are seeing some amount of intervention coming in from RBI if you look at the recent forex reserve data.